The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 27th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, if you can't dial in, no problem. You can always let those fingers do the walking. You can send me an email, steve@tfnn.com. Just inside the subject heading of your email, please put radio show question. Much easier for my eyes to see that you are, it separates your email from all the junk. And I'm not interested in the junk, just your email out there. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading up 4 points, so we got a flat market, 24,367. S&P's up 5. NASDAQ's up 10. Russell is flat. Stocks, semis are down about 8 points. We'll call that basically, well, it's a half a percentage point, 0.6% to the downside. We can't really call that flat. Trends are up 0.8% or 89 points. New York Stock Exchange up just a tad. The NASDAQ Composite basically flat out here. Spot volatility index trading out at 1581. It's below its 50-day exponential moving average. Something to think about. You got gold up $5, silver down 9 cents, leading the chart to the upside. Amazon with massive volume behind the move, both on a daily and a weekly perspective. It has rejected its highs. It will be back up there. Of course, the day's not over. It could close over the highs, setting up one gargantuan A to B equals CD to the upside out there. Big, wide-ranging bar, gap to the upside. We'll take a look at that. You've got SVB Financial up $42, 16%. Booking Holdings up 32, Baidu up 11, AutoZone up 11. To the downside, Charter Communications, $36, that's 12.25% to the downside. Regeneron Pharmaceuticals, that's off $18 or 5.6%. Athena Health down 13. Liberty Broadcast down $12, that's 14%. So there are things to look at. Of course, I want to look at what you want to look at. No requests in the bullpen just yet, so we are awaiting your calls, your emails, your pings inside the Tiger's Den. In the meantime, let's go take a look at the market. So a wild ride this week. Instead of taking since week's coming to an end out here, let me just clean up this chart just a tad and get these volume bars off because they're not accurate with regard to the indice. We take a look at what we've done inside the Dow. A wild range. Now, the weekly, the last 10 weeks, the average price movement from a weekly perspective, about 365 points. But you can see we're basically unchanged for the week. Unchanged. Or unk, whatever they call it, huh? Unchanged. That's what I like to call it. A lot of price movement, no doubt. But between the open on Monday and where we're at right now at 1:10 in the afternoon inside the Dow, not a whole lot going on. Intraday, absolutely. If you take a look at the S&P 500, basically the same setup out here. Just down maybe a point or two, a couple points, but no big deal out there. Let's take a look at the NDX. That has had the wild ride. Let's go see what it's doing here for the week. And for the week, yeah, so the week, we can see where this has been the little stinker. And, of course, that was set up by that island top. I heard Basil mention that earlier. A couple of other patterns that are out here. We'll take a look at what's going on there. So the NDX, the stinker. Let's take a look at the Russell 2000. Russell 2000, flat. Totally flat line. Now, what does it mean? Really a doji candle, which is what this would be here. Just a indecision. Now, for me, dojis don't mean anything other than when they are up at the highs, when they're up at resistance levels. But that's just how Stevie uses them. There's other ways to use them. But you've got an unchanged market inside the Russell 2000. And it's not been a sleeper between the trading of Monday and today. If we take a look at the New York Stock Exchange, let's go see what it has done here for the week. Here, the New York Stock Exchange, interesting, the wider swath, the wider basket of the market, it's actually up for the week. And a decent move inside the New York. Oh, that's a daily chart. I apologize. Let me come back. Weekly chart, unchanged. I don't know, I thought it was on the weekly before. Let me make sure on the Russell 2000. I may have made an error. I like to correct my errors. Russell 2000 down just a tad out there. Let me get back to the NDX 100. Yeah, okay, there's the NDX 100. That looks more like it. So not unchanged, but look at the wide ranging. Look at the wide range in price spread. Yeah, pretty interesting out here. Audio very bouncy. I don't like when my audio is very bouncy out here, so we will try to. Wilshire 5000 out here, because if it's bouncy, I'm making you seasick out there. Hey, nobody like Wilshire 5000. So they all look about the same. So what's the information that it's providing us? On the weekly chart, the interesting thing about the Wilshire 5000, it has been a test and rejection of that April 2nd week out here. It's kind of interesting. I wonder if they've all done that. Let's take a look at the S&P 500 via the SPY. Let's just see what that has been. So there, let's go ahead and put the volume on, see where we're at from a weekly perspective. So the week, there's a couple of swing points that you would use from a weekly basis, but the week of April 2nd, began April 2nd, there were 692 million shares. This week, we're at 380 million shares. So you've got a test and rejection of that swing point as long as price closes above 266.64. You're at 266.96. So that's interesting. What about the diamonds? So Dow diamonds rejecting anything? Now, it's still trading in that April 2nd level. How about the IWM? Let's take a look at that. Not WIM, but IWM. Let's try it one more time. IWM. And the IWM, that has been a test and rejection. So that's swing point of April 2nd out here. This is a weekly that we're looking at. 137 million versus 83. Yeah, interesting. So if you were to take a look at this, this would say you can't bust them down. You're going to try to go bust them to the upside. The thing is, it's already doing that too. That's a swing point that has 101 million for March the 12th out here. And that is 156.37. You've been up to a high this week of 156.63. So kind of, if you're looking for a gauge, just really neutral, really indecision. Could bust them down, light volume, could bust them up, and it did that with light volume as well. So not a lot there. So what should we do next? Probably just go to our first email question coming from Ruby. Well, the question is, Steve, does the Australian dollar have anything to do with positive or negative move in metals? The Australian dollar and FCX, Ruby, those are the two things that are correlated out there that I've been able to identify. I'll try to pull up that chart. We'll take a quick peek at it. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So before we went to that break, Ruby had asked the question whether or not the Australian dollar had a good correlation, positive or negative, for the move in the metals. And the one thing that it correlates well to, now the chart we're looking at in the top panel is Freeport-McMoRan, FCX. The panel below that happens to be the Australian dollar. So just take a look at the price movement. You can see that when you are trading one, you are trading the other, for the most part. The bottom panel happens to be that 5-day correlation between the two instruments. So we're looking at the average movement over a weekly period, over a 5-day period. And the bars, when they are above zero, which is the predominant number of bars out here, tells you there's a positive correlation, positive directional correlation out here. Now, we should just answer the question and just simply type in the gold contract, because I don't know the answer to this, but I will say FCX and the Australian dollar. If you're ever trading FCX, you've got to pay attention, or you should pay attention, to what's going on inside the Australian dollar. Let's go ahead and take a look at whether there is any correlation between the Australian dollar and gold, because I don't know the answer. And so give me a moment here to put that in the correlation chart here. So we've got gold, you've got the Australian dollar. Yeah, so that's already in there. So, yeah, there's been there's directionally speaking, let me make sure I've got this set up properly. We've got gold on top, and then on my correlation tool, I've got the Australian dollar. Yeah. So as you take a look at this, Ruby, there certainly is a positive correlation here. In fact, maybe even better than what we just took a look at inside. Again, directionally, it's a direction thing. Don't necessarily be taking a look at the bars and the depth or this or that out here. But, yeah, if I take a look at that correlation tool, we do see a directional, and it would be positive correlation, meaning they're both typically moving in the same direction out here. So the question would be, can you find a bottom inside the Australian dollar, right? I mean, that would be a question that I would ask. I don't know the answer to that. Let me see off the top of my head. We can see that it's trying to It's trying to move back into a prior swing point low out here. I'm just trying to get my other chart, give it enough time to kind of load up, see if there's anything, Ruby, that you and I can find here since you brought it to our attention. Now, this is going to be off just simply by a few pips at this stage, but it's good enough for the type of work that you and I do. So we're looking for a couple patterns out here, right? What would be the pattern? Well, we take a look at seventh wave moves. Let's see where we're at in the wave count. We're not there, so we don't have that. Do we have an A to B equals CD pattern? We don't have a completed one. Let's take a look at those. What do you mean we don't have a completed one? Well, here's the A to B equals CD pattern. We can see his price made its target in the 1-to-1 in the 76-cent area. No bullish reversal signal. Looks like we're having potentially, is that today's candle session? It is. So today you do have a bullish reversal signal. This could mark a buy the D point, Ruby. If today completes a bullish reversal signal. Now, the next thing you would need in order to confirm the A to B equals CD pattern, that it's a buy, would be a close above Stevie's red line. In this case here, you're looking at a price point of 0.7624. So keep your eye on that. Good eyes, good question, and always good for us just simply to go back and take a look at the facts, right? That's what you and I, we are kind of like fact checkers out here. When people make a statement, we like to go and say, well, is that real or not? So Ruby, Tuesday, may be onto something, and that's with regard to the Australian dollar and gold. Of course, if we go take a look at gold and we're looking for some type of pattern, what are we going to find there? Well, if we take a look at the gold chart, we pull this over, the only thing that you and I can take a look at is, hey, you know what? Gold is down toward the bottom of its consolidation range. Doesn't mean it can't go a tad further out here. We don't really see any type of reversal pattern. We just see sideways movement out here. So, and what we are seeing, is the price oscillator is now slipping below zero. Never really a good thing. But the consolidation pattern is what rules. Much easier consolidation pattern to spot in the gold contract versus some of the indices as we speak right now. So, Ruby, keep your eyes out. You've got gold down towards the bottom of its range. If you are a swing trader, you're looking for some type of pattern on an intraday chart to hang your hat on, maybe to take some type of a trade. I'm not necessarily suggesting you do that right now, but certainly Sunday. We do have full moon coming. Yeah, when is the full moon, guys? Is it this weekend? This weekend or Monday? I know it's coming up soon. And oftentimes, it hasn't been really reliable, but oftentimes the full moon can act as a propellant for the direction of gold out here. Used to work really well, kind of out of favor these days, but, something else worth noting while gold is hovering around the bottom of its consolidation area. With regard to, let's take a look at what the market. We started to take a look at a weekly chart, right? So I was just kind of sneaking around looking for my weekly. What have the markets done this week? By the markets, I'm referring to the equity futures contracts. April 29th. Today's the 27th. 27th. It's all day. 2 more days, so that would be Sunday. Got Sunday as the full moon at 7:59. I don't know if that's ephemeris time or what, but it looks like whether it is or it isn't, should be a nice full moon out here. Thank you, Mr. Z. And but if we take a look at what have the markets done this week, what do we know about the markets? There are 2 very specific things that you and I know. They're inside the Dow and inside the Russell 2000. And the exact opposite things occurred. Inside the Dow, the YM, that's panel number 3 from left to right. We can see that price tested and rejected the bottom of its weekly profile. That figure was 23,812. We're trading out to 24,288. Now, the box itself is equally distributed. Prices made it up to that equal distribution area. Whew, got through that. 24,572 is the number. That has acted as resistance until you see price close above the center of the box. We may just bounce around between the center and the bottom. If it closes over the center, then you can see price moving up to test the top, 25,331. In the case of the Russell 2000, it this week has tested the top of its box. That is 1575 and change out there. And then price moved lower and tested the center line. Now, its box has a bullish structure. So it rejected support. When you take a look at a box like that, a box like the weekly on the Russell 2000, 1541 is the center and 1530 is the bottom. That's a fairly narrow area. So it tells you that support, strong support, should be in that range. Now, that beautiful thing about that is when you close below strong support, you know that price is headed lower because the bulls, the cavalry, the front line just got pummeled. And that's not what has occurred thus far. Is there anything we can glean from this? Hey, the Dow rejected the lows, and the Russell rejected the highs. I can't glean out anything more than that. Inside the ES Mini, it's got a bearish structured box. It's trading right around where both buyers and sellers are comfortable, 26.79. That's a strong resistance level, 27.05. Hey, a brand new box in the NQ, 63.97 at the bottom, 69.42 at the top. Price trading right around that center line. Steve Rhodes with TFNN. We'll see if we can get things off the center line as soon as we get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Flat markets out here. So let's take a look at some individual stocks since I don't have any questions in the bullpen. And let's start by taking a look at Amazon. Lead the charge dollar-wise up today, up 67 points trading out at 1585. And, you know, for me, the easiest way to kind of wrap my head around what is going on inside anything is to make sure I understand the big picture. For me, the big picture would be just simply taking a look at a monthly chart, and the month's not over, but the monthly chart is not too far from being over, and try to, well, when's the 30th? 27th. I know it's on the 30th is on the 30th, right? But today's at 27th. 28, 29, so it's Saturday, so Monday. So we're not too far away, right? And so if you take a look at the monthly chart, what has Amazon done so far this month? Is there any kind of topping pattern? Well, there's not anything that I see. If I do, looks like wave counts right here. Maybe you're in wave number 4 to the upside. What price did this month was it came down and it tested Stevie's red line. That's a key level of support. As long as price tests and rejects that area, because you have a rising price oscillator, that's a very bullish signal. Now we can see where the bears try to take a stance, and that was at the high of last month out here. That's why you see that little dark cloud cover. Whenever you see a bearish reversal signal, you like to see follow through. That means follow through movement, in this case here, to the downside. Bullish signal, movement to the upside. Do you have to? No, but it really helps to confirm what it is you just looked at. Couple examples on the screen. You have a bull sash candle out here, and it looks like in October. What happened the next month? You moved a bit higher, right? You're above Stevie's red line. Oh, by the way, those red boxes, red or green, we don't see any green. Those are Rhodes momentum signals. Red is bullish. Green is, okay, we're either retracement or we're in a downtrend. Here you see we're just totally in an uptrend out here. So we know there's resistance at last month's high. That's what's being tested today. Maybe tested again on Monday out here. But if we're looking for a topping pattern, we don't see it. In fact, this month here should be a Tom DeMark setup number 7 candle, with at least 2 more candles to come if this momentum continues. So it looks fairly strong. If we switch to the weekly time frame here, we're going to see some chinks in the armor. And the chinks that we're seeing out here, we can see when price was moving higher, doing with less relative energy. That happened quite a few weeks ago, March 16th. It wasn't until the following week, March 23rd, where we saw a confirmation of that topping pattern out here. It was the following week where price closed below Stevie's red line, and then price seems to have found support. In fact, we are now, last week, what Amazon did was it closed back above Stevie's red line just by a little nudge. We can see we're well above it this week, should close above it, it being 1542.93. Price still moving higher, doing less relative energy out there, but it's really trying to take on a level of resistance, right? The high of the week of March 16th. Now, if we go from the weekly, and I'll switch charts here because I've got the volume that we can take a look at. Let's go take a look at Amazon. And what we're going to notice is we are noticing, well, this is the daily time frame. The daily time frame, you can see how price is trying to, 1617.54, close above March 13th, which had volume as a swing point at 6.5 million shares. You're at 10 million shares already. You've rejected the high, 1617.54, at least thus far. Says you're going to be up and at least test 1617.54. A close above that level, then you've got the A to B equals CD. The short one is this daily, very conservative, $1,704, $1,800. But as we switch to the weekly time frame, this is where we're going to see that, and this is the weekly, is where we saw the most bearish action, so to speak, pattern-wise. But that weekly swing, the week that began March 12th, had 25 million. You're into it with 37 million shares. The close on that session was 1571.68. You're at 1583. First, on a weekly basis, if you close above 1571.68, it says you're definitely going to go back up and test the highs out there and maybe blow it out. And if you blow it out, well, then you've got a large A to B equals CD. I heard somebody on that had a price projection in the 2,000 area, and I'd say that lad is must be listening to our show, because the 1-to-1 A to B equals CD would be 2038. Now, it's a weekly time frame that we're looking at. We're not saying next week or 2 weeks from now or 5 weeks from now. We're saying that over time. In fact, if we were going to try to guess when price would get up there, we wouldn't guess, but we would estimate in September of 2018, sometime around that level. And if price gets up there before then, well, what I can say is that 22.25 becomes the real price target. First, Amazon has to close above resistance, but it's doing a pretty good job confirming that that is what it wants to do. We've got SVB Financial. Why is this thing up 16%? What do they do? What did they do? Let's just take a look at what the stock is doing. Man, that is a move. Let's put this. That's on a weekly chart. That's on a weekly chart. Well, you know what we have here at TFNN. We have call-ahead seating. And that means no matter what it is I'm doing, if you call, I'm going to do my best to get you bumped right up front. So let's go out to Philadelphia and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Hey, Steve, I'm very good. Good week for you. Thanks for all you do.
You're welcome. Thanks for all you do.
Hey, Steve, I wanted to ask you to pull up your chart work on the June NASDAQ 100 futures.
Okay.
And share with me what you see that tells me that I'm wrong in speculating the high this morning up at 67.70, an exact 5786 test. Why it's not headed, destined to trade off lower, back down to that 64.30 low that was that occurred on Wednesday midday.
Well, how about if I do this? Instead of proving whether your conclusion is wrong or not, why don't we go take a look at what the charts are doing and have them tell us what they want to do, at least based upon what I see. And let's take a look at this morning. Let's take a look at this morning's action first, because you and I, there's a certain set of patterns that we love to pay attention to. And one of those is when price is moving higher, doing less relative energy. And as we take a look at it being the NQ on a 30-minute time frame basis, what we can see is that as we got to the 9:30 session, price was moving higher, doing less relative energy. The bears showed up. It was clear, but they reared their head right at 9:30 when they formed that bearish engulfing candle for the next 30 minutes, more than 30 minutes, next hour and a half, just simply continued to sell lower right into the breakout session from yesterday after the release of the numbers for Amazon. So you got a breakout, you got price coming back and testing a level of support. Okay, that's one thing. On the 30-minute chart, price kind of stalled here. So then you and I have to say, well, why did price stall in that area? Is there anything logical that we can find as to why price inside the NQ stalled there? For me, the answer was pretty easy, because the chart time frame they gave us, or has been giving us, the absolute best signal since January with regard to tops and bottoms is your favorite. Of course, you've made it my favorite, the 5-hour chart for the NQ. When we come back from this break, we're going to go take a look at the exact price level that's going to tell John whether price should move lower or higher. They'll tell you too as well. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with John in Philly, and he and I are trying to determine what are the charts communicating to you and I about what the next move would be, to the upside or to the downside. And as he pointed out, if we take a look at this morning's move here, as it was making its highs, it was making about a 0.618 retracement. I believe that's what you said, John, from the highs out here on the trading day of April 18. And that would be a logical place where price would turn around. We had some other patterns as well on the shorter-term time frame that we looked at. And then price was moving lower. Now, the time frame that we're looking at here is a 5-hour chart. It's been providing extraordinary signals for tops and bottoms out here. The most recent bottom, this one generated the signal back at 2 o'clock in the afternoon. This was on Wednesday, I believe, and then we saw price move up, get above Stevie's red line. And what we can see here, John, and I don't know why the phenomena occurs, I just know that it occurs. What we can see is that price oscillator at the bottom portion of our screen is getting up towards the zero line. And this is where we get the test where the bulls and the bears tell us who's in charge from this point forward. The test and the exact price point, by the way, and this is a 5-hour chart. The session on my system ends at 2 p.m. So we've got another 17 minutes. And the price point that we're looking at, and we're not, if it's a buck or two, it's not really convincing. But the price level that we're looking at is 64.75. Where it's, I'm sorry, is that 64? Did I say 64.70? I didn't mean that. I meant 66.58. We're trading at 66.58 and change out here. If price were to close below this level, then this would say to me, and continue moving, that price should then go lower. If this is a test. This is a test to see if it's bullish. This is what you would expect in a bullish move, because the retracement we've seen so far has been a 0.382 retracement. So we're trying to answer which one is correct. I say the chart will answer it for us. It may not be till 5:15, but right now it's just a test of support out here. And we can see that back here, the last time that this price oscillator got up to the zero level, back at about 2 o'clock on the 11th, is where you got that test of that red line. This is what a bullish test looks like. You test support, you keep going higher. And you have that rising price oscillator. Went higher till it made that 7th wave move. So I don't know. I can't say whether your conclusion is correct or incorrect. I know that there's a level of support. And to the short side, then the message would be you're going to close below that level that we just looked at, 66.58, because you would turn down the price oscillator below zero. And a falling price oscillator below zero is bullish, unlike the rising price oscillator that we had back here when we saw another test where prices were moving higher. So that's what I'm looking at. That's what I see. Does that help, or what other questions maybe?
Yeah, it sure does. Let me just conclude by asking what, in your thinking, the feature of the NASDAQ 100 and composite charts up to highs on March 13, having made higher highs with a relative price divergence, what that feature or what significance that holds in your thinking, please?
Yeah, so it's a significant bearish reversal signal. That's my thinking, because on the weekly you've got the divergent pattern, on the daily you have the island top out there. So what that means is that inside the composite you've got to find reasons to become bullish out here. And for me and for you, that's some kind of a pattern. Right now, this is at least saying to me, the daily chart of the NASDAQ composite, we've just kind of switched over to that. We can see on a daily basis that price is above Stevie's red line, 709,460. If that can hold a support, John, it just simply tells us there's a little bit more counter trend rally to follow. If price closes back below that level, then the route to the downside could begin. And I don't have any other completed pattern. I don't have any completed pattern here inside the NASDAQ composite to say that the move is over. I do in some other indices, but I don't inside the NASDAQ composite. Inside, for example, the Dow Equity Futures contract, yeah, I've got a bottoming signal, and that has held up pretty good. Inside the semiconductor index, this is going to be kind of interesting, because it made that seventh wave move a couple of days ago. Now, it really needs to close above that red line value of 1274.13. And, today was an opportunity to do that with Intel's earnings and so forth. So it hasn't really given a confirmed signal. But if I just say, if you and I have seen these seventh wave moves, and can you believe it? Can you believe those things? You get to that letter G out there, or wave number 7, and they can act as a reversal area. But your question about the NASDAQ, your question about the NASDAQ composite, I don't have anything other than for it to say right now that it's doing a little bit of a counter trend rally, and kind of goes with a thesis maybe of some window dressing stuff, I guess. I don't know, but that's all that I can come up with inside the NASDAQ 100 specifically, which we know has been hammered. The level to be looking at here now, the NASDAQ 100, we've got two competing on a daily basis, a very bearish pattern and a very bullish pattern. And I don't think it was on the NASDAQ composite, but you could correct me there. And that's the 3 drive to a bottom pattern that formed out here that so far has really held up as a bottom. So the way that I would draw my conclusions here in the NASDAQ composite is you've got a bearish top and you've got a bullish bottom. And to me, that almost just signals consolidation more than it does anything else, at the moment. That 3 drive, we know how important that is. How much bread have you made trading a 3 drive to the top or the bottom out here? And and price is still trading above Stevie's red line, 66.1210. So I see the NDX specifically, nice top pattern and also a nice bottom pattern. What can you add to what your eyes are looking at?
Yeah, Steve, I'll make the case for what I'm looking at that argues for a more significant decline dead ahead in the NASDAQ 100 and the composite is this. One, the price relative strength divergence that you pointed out back there on March 13th. Two, the high on April 18th at the Fib 618 retrace exactly. I mean, absolutely precise.
Exactly.
That's number 2. Number 3, the presidential cycle, the midterm, the cycles for, or the average performance rather, for the midterm election year with a high on average April 18th, bullseye. Then looking at the top 5 market capitalization stocks within the NASDAQ 100, which, by the way, constitute close to 50% of the NASDAQ 100 capitalization. 1, Apple, already in a defined downtrend on concerns on selling over concerns of weak iPhone 10 sales. Two, Microsoft,
hold your thought if you could. We're just about to go off the air because I want you to just go ahead and complete your thought, and you can do that, wrap that up in about 30, when we come back in about 30 seconds. We'll be back in a couple minutes. You can wrap it up in about 30 seconds. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Right out to Philly to speak with John. Let him finish up his thoughts, and it's kind enough for him to share what he is looking at with us. So you were talking about the top 5 components inside the NDX 100. So go ahead and pick it up from there.
Yes, indeed. Thanks, Steve. Apple defined downtrend, at least on the short-term week. iPhone 10 sales expectations. We have Google reported blockbuster sales and profit growth, but you can see the stock's under pressure nonetheless.
Sure.
And then we just had Microsoft and Intel, fabulous sales and earnings growth in both cases. The stocks both spiked. But interesting, look at how they've sold off as if, well, sellers were just waiting to distribute the stock. They look like 3 drive to top patterns. perhaps the best is out on both those two for the short term. Then you've got Facebook counter trend rally potentially topping under 180, and then leave Amazon aside, which is just a powerhouse. But when I look at all those, I can see the case for extended selling in all of those, excluding Amazon, and taking the composite index back down under at least this past week's lows.
No doubt, and a real possibility. No question about it. And you got to take each of these individual charts one by one. In the case of Apple, close to completing a 1-to-1 A to B equals CD to the downside. Don't know what it's going to close like today. If we were to move higher, if the markets were to move higher, the NDX, specifically Apple, it's got the potential for a hammer candle. It's not there yet, but if you did, then you'd get at least a bounce to the 167 area. Whether that's the bottom or not, I don't know. If we don't have a bullish candle, though, then simply price can head lower, 159.91. So, John, thanks for calling in. I really appreciate it, sharing every thought you have with all of our listeners out there. And, folks, it's the end of our show for Friday. So, look, you have a safe weekend. Enjoy your weekend. But don't start your weekend until after the favorite Polar Bear show that's up next. And, of course, Tom O'Brien, 3 to 5. Then you can start your party. And we'll see you back here on Monday. Have a great day, great weekend. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading